Thank you, Anna. Alex, what is your daily trading look like? What does it look like? What do you do? What is your advice to people who are actually starting or are in the middle of their career as a trader and hopefully get as successful as you might be?
The problem with what I would like to say to everyone is that I know it will be largely ignored. And it will be ignored because it's not sexy enough. And that's because most people consider trading to be like sex. You don't have to be good to enjoy it. So my 2 cents worth is, if you really want to focus on asset creation and wealth creation, of course, entry methodologies and stops are all important, and they're a fundamental core of your daily routine. However, if you do portfolio attribution analysis, which means you try to dissect the parts, the drivers of your portfolio, the drivers of your performance, these will not come from your systematic trading or your discretionary trading. It will come from exits or entries. There are 2 core parts to portfolio performance which are used by professionals, and these are the focus of the professionals. 1, position sizing. I can take any mediocre system and apply position sizing methodologies, even at their most rudimentary level. For example, like an equity curve manager, when a strategy falls below a moving average of its own equity curve, you cut your size, and it will greatly increase your performance. But it's not sexy enough. People want to be hearing about buying tops and bottoms. So the first thing is position sizing. The second part is diversification. But diversification has 3 components. The first part is time frame diversification. A lot of people do that. You know, they might trade the 5-minute chart and then the daily chart. The second part of diversification is across markets. Some people do it, but it's not that unknown. You know, they trade bonds and then they trade FX. But the third part of diversification, which very, very few people do, is strategy diversification. 90% of the people you will meet are one-trick ponies. And there is nothing wrong with mastering one strategy, but there is no one strategy that works across all fundamental volatility environments or trend environments. So my suggestion to you is, of course, you must have something robust in your hands, but place more emphasis and invest your time in position sizing and diversification.
Thank you very much, Alex, Adrian, David, Anna. I think we're just about running out of time, so thank you very much for being here today to analyze your ideas about how to overachieve. Thank you very much for attending, and I hope you enjoy the rest of the show. This has been recorded. In case you want to see it again, you'll be informed by the Money Show. And don't forget to pick up a copy of Traders Magazine if you want. Drop by our stand as well. Thank you very much.